Fundamental Management Accounting, August 2023, question number 2. It reads, Rendo Limited is considering the type of remuneration scheme to adopt for its employees. The following information is available to use for your analysis. Employees, we have A, B, and C. Actual hours worked, that 8, 36, 40 hours. Hourly rate per hourly rate of pay, it is 200 shillings, 150 and 230. Outputs per unit, we had X, Y, and Z. For A, B, and C, we have been given. Additional information. The standard time allowed per unit is 10 minutes for product X, 20 minutes for product Y, 30 minutes for product Z respectively. For the calculation of this rate system, the company values each minute at the rate of 8 shillings. Calculate the earnings for each employee using the basic guaranteed time rate, then Roman 2, the base work rate. Now, this is meant to calculate, for example, for piece rate. We have the employees. Let me use this particular my worksheet. We have employee A, employee A, B, and C. We have actual hours worked, that is 38 hours. We have 36 hours, then we had 40 hours. Then hourly rate, we are told that for A is 200, we have 200, 150, then we had 230. Therefore, we can multiply with the figures of what employee got. Let me use this calculator. We have 38 multiplied by 200. We have 7,600. That is 7,600. Then we hit that 6 multiplied by 150. Have 5,400. Then 40 multiplied by 230. We have 9,200. That is the basic guaranteed time rate for those particular employees. Then we are told that the standard time allowed per unit is 10 minutes for product X, 20 minutes for product Y, and 30 minutes for product Z. Then for the calculations of the base rate system, the company values each minute at the rate of that. Now calculate the base rate. How do we determine the base rate? Now, first of all, we are going to determine the number of hours or minutes worked by each of these particular individuals. We have A, B, and C. Now we are going to have here A, employee A, we have B, and then we have C. Then we have X, Y, Z. For this one, we had 150, 80, 100. That's A, 50 units, 80, 100. Then for B, we had 150, 80. We are putting here 150, 80, and then here we had dash. That is for Z, we had dash. Then for C, it was dash 80, 80. dash, then we hit 80, 80, 80. Those are the units per units produced. Then we are told that the standard time allowed per unit for X, it is 10 minutes. 10 minutes for product X. Product X meaning here we are going to multiply by 10. We multiply here by 10. Here it was dash. Then we had for product Y, it was 20 minutes for product Y and 30 minutes for product Z. 20 minutes for product Y and 30 minutes for product Z. We multiply by 20. Here we multiply by 20. This one we are multiplying by 30. Then what you get, we want to get the number of minutes each one of them worked. As 50 multiplied by 10, we get 500. 500. Then we have 80 multiplied by 20. 80 multiplied by 20. Have 1600. Then that is 3000. The total we can have 3000 plus 1600 plus 500. We have 5100. 5100 minutes. Okay, then we hit 150 multiplied by that, we get 1500. Then 1600. The accumulations becomes 3100. Then here we go 1600. Then here we have 2400. Accumulation we should be getting 2400 plus 1600. Have 4000. 4000 minutes. These are the minutes. That is the minutes. Now, and we are told something. That's step number 2. Addition information number 2. For the calculations of this rate system, the company values each minute at the rate of 8 shillings. Therefore, we can have that is product A, B, C. Now minutes, we have time taken. Let me use time taken in minutes. We have 5100 minutes. Then we had 3100 minutes. Then we had 4000 minutes. And we are told that the company values 8 shillings per minute. We then multiply by 8. We multiply by 8 shillings. Therefore, we can get at the amount this person called. Multiply by 8, we have 4800. 4800. Then we have that 100 multiplied by 8, have 24,800. Then 4000 multiplied by 8, that is 32,000. 32,000. That is the base rate system, and that is the guaranteed amount to those particular individual court. Question number B. The following information has been extracted from the books of Delta Limited for the year to that 1st December 2023. We have the productions, that a unit, 1,000 unit, sales, 24,000 units. At that point, it is just prudent for us to determine the closing inventory. We can, first of all, before we proceed, we can say that opening production, which we have 30,000, and the unit sold is 2,400. Now the difference is 6,000. These are the what? Our closing inventory. Don't forget that we are going to use 6,000 somewhere as closing inventory. Then we are told that the direct materials are 7,007,200,000. We are carrying 3 zeros. Direct labor is given, variable overhead, fixed overhead is given there. Then selling administration has also been given there. The company's unit selling price is 550. Prepare the statement of profit or laws using the following costing techniques. First of all, we need to calculate the cost per unit, variable cost per unit. Let me determine variable cost per unit. Let me just use cost per unit. Cost per unit, we are going to have the unit value or the amount you have here. Direct material, have direct material. I'm going to split them here. This will be marginal. Then this one is going to be absorption. Absorption, we use the total cost, while marginal, we are focusing on variables only. Have direct material, we hit 72. We got 3 zeros up there. We are targeting 3 zeros. They are meaning these figures are in thousands. Direct labor. Direct labor. It was 18. We have a variable overhead. Variable overhead, which was how much? 15. Then we had fixed overhead, fixed overhead, that is here is dash. Then that's 2,700. 2,700. Can find the accumulations at 7,200 plus, yeah, I think 1,500. Have 10, 500. Then that one we are just going to add 2,700. Have 13, 200. Divide by the units produced were 30,000. Let me just multiply those, sorry. It is going to be 10, 500 divided by 30,000. The answer we multiply by 1,000. Remember, they were in thousands. Meaning at this point, we are going to have 350. And then here we have 13,200 divided by 30,000. Have 44. Then when you multiply by 1,000, you are going to have 440. That is the cost per unit. Now that makes it easier for us to compute the marginal cost. I'm going to have this business of who? We have Delta Limited. Having Delta Limited. Delta Limited. Marginal. Sorry. Income statement based on marginal costing. We start with sales. We are told that selling price is 515 and units sold were 24. Now we are taking 550 multiplied by 24. 5500 multiplied by 24, we have 13,200. 13,200. Then we less production. which we had 30,000, making forget 3 zeros, we multiply by the variable cost per unit, multiply by 350, 30,000 multiplied by 350, have 10, we have less closing inventory, which we have 6 multiplied by 350, have 6 multiplied by 350, have 21. 1050 minus the answer, we have 8,400. 1320, 13,200 minus the answer, we are calculating for what? For 8. Then we can less all the overheads given in these questions. We are told that fixed overhead, we start with that. Less. Let me put all the overheads. We start with fixed overhead. Fixed overhead, it was 20,700. We have selling and distributions. Selling and distribution cost, we had salaries, selling and distribution, and distribution. We have salaries, that was 450. What else do we have from our list? Variable sales commission, sales commission. Sales commission was how much? Sales commissions, it was 300. That's 300. We had promotion. Promotion and advertisements were 480. 480. Then we have the lastly, it was administration cost, which was 720. Administration cost, which was 720. Administration cost to 720. Then you find the total, that is 2700 plus 45 plus 3,300 plus 480 plus 720 is equal to 4650. Then we minus 480 minus the answer, we are having a net profit of 150, which is equivalent to 150. We multiply by 1,000, being 150,000 as our net profit using marginal costing. Let's do the same using absorption costing. Let's do the same thing using absorption costing. Absorption. We are going to start with sales, which was 24 multiplied by 550. We did that and we got 13,200. We less cost of sales, which we are starting with the production. Production was 30 multiplied by what? 440. 30 multiplied by 440, which was 30 that is 200. We have less closing inventory, that was 6 multiplied by 440. 6 multiplied by 440, that is 2640, minus the answer we have 10,560. If you minus that, I guess you're going to get 2640, and 20 minus the answer you have 2640. Then we list that the overheads, that is now the gross profit, then less other overheads. We start with we are told the selling and distribution. And the first on the list, it was salaries, which was what? 450. And what else do we have on the list? We had salaries, variable, sales commission, promotion. Sales commission was 300, promotion 480. Sales commission, just a minute. Then we have here sales commission, that was 300. Advertising, that is 480. Then we had administration. Administration was how much? Was 720. Then we can do the evaluation, that's 450 plus 300 plus 480 plus 720. We are getting 1950. And then when you take 2640 minus the answer, we have 690. 690 as our net profit, which is also equivalent to, we can take 690 because it was in 1,000, 690,000 as the net profit. That's how the marginal costing and absorption costing ought to be done. When you are using the absorption costing, we are taking the costs after, we call it full cost. But in absorption costing, we segregate that is the variable cost versus the fixed cost. And then we compute to determine the contributions of the selling price by variable cost per unit. Thank you.